Hi Gavin, how you doing?
Good, thank you.
Good. Thanks for joining me. Four broad open banking questions for you. But firstly, what are you guys up to at FDATA?
Well, we're focused on campaigning for open finance across the globe.
Yep.
The key components of that are the importance of a customer data right. We focus very much on the role of explicit consent that the customer can give and take away. We also help markets to develop the liability model for customer protections when financial data is shared. I'm really trying to look at whole of finance scope. So starting off, for example, in Europe with PSD2, it's just payments data, whereas the market is already widely using savings data, loans, mortgages, investments, pensions, other forms of financial data. So we're hoping to bring all of that into regulatory scope and ensure that the customer has the right to share it with regulated actors of their choice. FDATA as a trade association is leading the open banking discussions in North America and Europe, but more broadly we've just set up a chapter in Australasia and in India, and very soon we'll be in South America, Japan and other markets across the globe.
Fantastic, keeps you busy. Good stuff. That's the first question there. What would you say is the biggest opportunity in open banking?
Well, I think the real opportunity is to enable the customer to be economically empowered with their own data and not to feel that they have limitations in choice. If you look at the history of financial services, much of the model is based on customer inertia, and the hope for many of the traditional incumbents would have been to keep the customer for a long period. Nothing wrong with that, but they weren't keeping them for a long period in the best product they could have offered. So by enabling the data to be released, it enables firms that are trying to provide better insights of how the customer can get to a better position. So if you look all across financial services, in lending and in savings products and investment and money management, in better sort of algorithmic decision making, there's an opportunity for that data to play a role in helping the customer, be they a consumer or a business, onto a better path.
Fantastic. Stuff. So follow up to that then, what do you think the biggest challenge in open banking?
Well, there's two sides to this. One of which is confusion among some countries, different places across the world, about what open banking actually is, and confusing APIs with open banking. So we've seen a number of markets that have heard about this open banking thing and required the banks to develop an API program, which they've done, and then when the fintech role comes along and says, can we gain access, discovered that the bank wanted to charge millions of dollars to connect. And therefore, there's not in that a customer right. There's simply creating a technical layer where the bank's still in control of what happens. And for me, that's not open banking, that's closed banking still. It's still a closed model. So we're trying to make sure that markets fully understand what's driving this concept, and it's not technology. Customer choice. So that's one thing. The second thing is at a European level, and to a certain extent, even though open banking in terms of account aggregation didn't originate in Europe, the opportunity to develop open banking as a sort of, I guess you could describe it, access to payments data via PSD2 created a kind of opportunity to go through a series of steps into savings accounts and loans and all the way through the financial landscape and potentially beyond. The problem is that the regulatory and technical standards that apply to PSD2 are creating a cliff edge moment, because in fact the banks, they're called ASPSPs, but not very helpfully, but the banks aren't really ready to support the API channels throughout Europe. They then have a legal obligation, if they can't do that, to support an adjusted interface. And frankly, they're not quite ready with that adjusted interface because they would have had to have been working on that because it's a complicated engineering build, and they've now only got sort of 2 and a bit months to deliver that. So if they introduce strong customer authentication on their digital channels, it'll mean that if the API is not up to scratch, or they're not even building an API because they don't have to, and the adjusted interface isn't ready, then there'll be no channel for the fintech or the third-party provider, as it's sometimes called, to gain access. So the thing that was designed to nurture and protect the open banking movement may end up killing it. That's one issue.
Yeah.
The second is that there's been no transition period. So even if a bank built a brilliant API, super high quality, they might not get their exemption, for example, to, let's say, the 3rd or 4th week in August, 1st week in September. If they then introduce strong customer authentication, as they are legally obliged to do on the 14th of September, there's no period for the fintech that's got 1 million customers to transition their customer base to the new thing.
Right.
So again, that's a serious customer detriment issue. And the third is scope. So we already talked about savings accounts and beyond. These things are already in very wide use in the market. So if you think about small to medium enterprises use cloud-based accountancy architecture from firms like Free Agent or Xero or Intuit, that make customers' business lives easier. Well, they already ingest data that's non-payments data, like savings account data, to create a full view of the customer's financial capability and marry cash back to the invoicing. So by limiting scope to just payments, it's already creating asynchronous requirements in the market. So these are the 3 big issues. One is potentially no access, no transition, and limitations of scope. And all 3 of them are connected to strong customer authentication. So we're trying to find a pathway, even though it's now set in the law, to try to move the market to a position of not enforcing that law until the rest of the market is ready.
I think you might have answered that in there, but what would you say is going to separate the winners from the losers when it comes to open banking?
Well, let's assume that all of the regulatory issues become solved. So the winners in open banking will be the firms that are able to best marry really high quality customer proposition onto a business model and channels to market. So some of these are quite, I'd say, ordinary business concepts, but where firms have no real mastery of data, their ability to then execute a innovative business model will be hampered. And then you could alternatively have a great mastery of data but not have a really interesting model. So you really need to have both of those things working in concert to really move the dial. And there's obviously lots of innovation going on, and the winners and losers will be the firms that are able to really move that dial and have sufficient resource and capital and connections to make it work.
Great stuff. And finally, and I'm interested because I think you've probably got a really good insight into this. What do you think the world of open banking is going to look like in 5 years' time?
I think people will no longer be talking about open banking, so it'll be open finance, potentially open life. Yep. We'll see a number of propositions that are coming to market with models that we don't even know about yet. I would hope that by then, across many of the developed markets, that we'll have access to all of the financial verticals and potentially other data sets, and we'll be combining those on behalf of the customer, and we will see, more than anything else, an improved value exchange between the customer and financial services, where the customer is getting a larger share of the cut.
I hope you're right. Fantastic. Thank you very much.